Hello and welcome to a special liaison meeting of the Governmental Accounting Standards Board with the AICPA State and Local Government Expert Panel. So we have a big group here in Norwalk. It's great to see everybody. It's great to have you here. We really appreciate your time. This is quite a group, lots of great experience. I know being in your seats at one point before joining the board, that you're very busy. You have plenty to do. You have plenty of things that you could be doing other than spending your time with us. So I appreciate that you've traveled here to Norwalk and that you're willing to spend a couple of hours with us, kind of going over some of the things that you're seeing in practice, challenges you're facing, things you think we may could help with, as well as talk about some of our ongoing projects, activities, et cetera. So it's really beneficial for the board to hear what all you have to say and maybe dialogue with you a bit. So thank you all for being here with us and welcome. With that, Tony, do you have any introductory things to say? And then we'll go around and introduce everybody.
Yes, thank you, Mr. Chairman. We really appreciate the opportunity to be here today with the board and the staff. Like you said, Joel, to discuss the activities that GASB is working on, but also just some practice issues we want to bring to your attention if you weren't aware and just maybe elaborate on. One of the highlights of being on this panel is obviously coming to Norwalk. It is a highlight for us, definitely, and interacting with the board, not only during this meeting, but just through the meetings yesterday and at dinner and so forth. So thank you, Joel, and the rest of the board.
Yeah, thanks, Tony. Quick reminder, and then we'll go. I'll probably start this way and go around, and we can introduce ourselves. The microphones work. Press the button when you're ready to talk. It'll turn green. Pause for just a second. The camera will kind of pan to you, and then start talking, and then kind of turn your mic off when you're done. That kind of helps the system pan to the right person. If we have only one mic on at a time, if you get messed up, it usually works itself out, but try to do your best there. But certainly nobody in the recording won't hear you if you don't have your microphone on. So with that, I'll turn it to I'm Joel Black, too, by the way, chair of the GASB.
Good morning, Jeff Praviti, GASB Vice Chair.
Good morning, Tammy Waymeyer, Senior Research Manager at the GASB.
Good morning, Kristen Schote with Robinson Farmer Cox Associates.
Good morning, Chris Telly with Forbes Mazars.
Good morning, Samuel Latimer from Rushton.
Good morning, Brian Caputo, GASB Board.
Roberta Reese, GASB staff.
Good morning, Scott Anderson, Chair Becker.
Good morning, I'm Jody Doherty with Ida Bailey.
Good morning, I'm Kimberly Williams with the District of Columbia.
Good morning, Tayan Ray, GASB member.
Hi, everyone. I'm Emily Paul, GASB staff.
Amy Sutherland with Moss Adams.
Hello, Jeff Markert with KPMG.
Chris Salem with PricewaterhouseCoopers.
Tony Boris with Crow, current chair of the expert panel.
Mary Folster, AICPA staff.
Good morning, Sarah Timmons with AICPA.
Good morning, Jackie Reck, GASB board.
Good morning, Deborah Beams, GASB staff.
Good morning, John Eng, KPMG.
Hi, Pam Dolan, GASB staff.
Scott Reeser, GASB staff.
Good morning, Carolyn Smith, GASB staff, GASB board.
Good morning, Tina Stewart with Carr, Riggs & Ingram.
Tracy Cooley with Deloitte.
Good morning, Brandon Young with LSL.
Good morning, Chris Knight, GASB member.
Good morning, Paulina Haro, GASB staff.
Good morning, Remy Omasor with CLA.
Good morning, Susan Wheeler with Ernst & Young.
I'm Michelle Cherkowski, GASB staff.
Alan Skelton, GASB staff.
Oh, he's Mr. Director. So great. Again, welcome. Great to have everybody here. Looking forward to the next couple of hours and our interactions. We're going to start with practice issues and things you guys are seeing. First up, we have Statement 103, our financial reporting model, one of our more recently issued standards coming up for implementation relatively soon. And we're going to start with Chris Salem on this one.
All right, thanks, Joel. And before I start, I just want to thank Roberta and Lisa for their time and thinking through some of the questions that we've had on this statement. They've been very generous with their time and really helped us understand some of the aspects of the standard. I think this morning I'd like to focus specifically on the definition of subsidies within Statement 103. So a little bit of a business type government issue. And in thinking about how I wanted to frame up the comments, I wanted to take a step back and think about the objective of 103, or at least that portion of 103. If I remember right, I think the objective was to drive consistency in the presentation of a business type government's statement of revenues, expenses, and changes in that position. I think maybe additionally there was kind of a view that this would help present how much of a government's operations are self-sustaining versus subsidized. And then also, I think in the basis for conclusions, there was an expectation that overall the changes that Statement 103 made would continue to align with presentation in the cash flow statement. And so keeping those things in mind, we've been thinking about the subsidy definition, and we do have some concerns that perhaps the subsidy definition could lead to some diversity in practice or could make it challenging to achieve some of those objectives. I'm going to go through perhaps some examples that I hope illustrate some of those concerns. I'll start with grants and contributions. And I know that the subsidy definition has three components: subsidies received, subsidies paid, and then transfers. Just for sake of brevity, I'm going to focus on subsidies received. And that portion of the definition, I think, has two parts. One, that the resources come from a party that you are not providing goods or services back to. And then the second part is that those resources would directly or indirectly keep fees and charges lower than they otherwise would be, current or future fees and charges. So thinking about that in the context of contributions and grants, I think that the first part of that definition, which I'll just loosely describe as non-exchange, is probably the easier aspect of the definition. But thinking through whether grants and contributions impact future fees and charges, I think could be complex or could lead to, maybe differences in presentation. I'll start with, most of my examples today will be higher ed, but I think these examples would apply to a variety of business type governments. I'll start with a contribution example. So let's say that a public university receives a donation to make scholarships to students. I think that thinking about that in the context of the subsidy definition, the first part of the definition would pretty clearly be met. It is non-exchange. We're not providing goods or services back to that donor. The second part could be more challenging, however. I can't speak for all public universities, but in speaking to my own clients, when they think about rate setting or setting tuition rates, they don't really take into account those kinds of donations in setting forth tuition. Now, what a student ultimately pays in relation to that established tuition may change as a result of that donation. And so if that's the view, if that's the way the client sets their rates and charges, then the donation would not meet the second part of that subsidy definition. And I think the implication of that is that the donation would be reported as operating revenue. That would be a big change from what public universities and other business type governments do today with contributions. They're almost always reported as non-operating. It would also drive kind of a difference in presentation on the statement of revenues versus the statement of cash flows. I also think that universities would have to think through this guidance in relation to all their contributions, and contributions come in with a variety of purpose restrictions, so that some contributions may not meet the subsidy definition, whereas others may meet it because they do impact rate setting or setting charges and fees. So that would result in contribution revenue being reported in two line items in the statement of revenues, in operating and then in non-capital subsidies. Thinking, turning my attention to grants, I think there might be a variety of scenarios where this definition could be complex or difficult to interpret. Again, I'll give a higher ed example. Say a public institution applies for a grant program. If they are awarded the grant, they will undertake the program. If they are not awarded the grant, they will not undertake the program. So I think thinking again about the definition, the first part would likely be met. The grantor is not receiving products or services in exchange. That could be debatable depending on the nature of the grant. But the second part could be a little bit more complex to think through. So some might look at that scenario and say, well, the institution never had any intention of changing their fees and charges as a result of this grant because they never would have undertook the program. Someone else might look at the scenario and say, well, the fact is they did undertake the program, and absent that grant funding, they may have had to increase their rates and charges to compensate for the program expenses. I think that under the guidance, either scenario could be a reasonable interpretation of the guidance. And depending on how institutions interpret that, it could result in the same grant being reported in different portions or sections of the statement of revenues, just depending on their interpretation. I think that in other sectors, for example, healthcare, there's a lot of complexity in the way that healthcare entities are reimbursed, especially by governmental payers. And I think that there's some concern that some of those complex reimbursement arrangements could meet the subsidy definition, which could be a change from the way that those entities are presenting that revenue today. I do think, Roberta, that the healthcare expert panel members may be reaching out with some specific fact patterns to try and talk through and get a better feel for how the guidance might apply. And then I just wanted to bring up one other item that I had recently talked to Roberta about. I had a client reach out asking about the interest subsidy on Build America bonds. And I use that word subsidy very intentionally there. The federal government refers to that as a subsidy, so not necessarily using the GASB definition of that term. But basically, it's a program where on certain bonds, a portion of interest expense is reimbursed by the Treasury. And the question was whether or not that met the definition of a non-capital subsidy. And my initial take was perhaps it could meet that definition. But in looking at the non-operating definition in 103, I thought also perhaps it could meet the definition of a revenue related to financing, because the incurrence of expense in a financing transaction is what drives the reimbursement that is received. So Roberta and I had some discussion about that. And again, I think that potentially, depending on how you look at it, you could come to either conclusion. And that would result in that revenue being reported in different sections of the statement of revenues, either in non-capital subsidies or in other non-operating revenues and expenses. So the point of all this, I think, is just to point out that potentially the way that people read that definition could lead to some diversity in practice, might call into question whether or not the objective of 103 will be met. And perhaps the ask there is that some additional Q&As on 103 could be helpful. If there are Q&As that maybe interpret some contribution and grant scenarios, that could drive better consistency in the way that entities think through that definition. So I'll stop there and get reactions.
If I could jump in on that things like the discussion we had on the Build America bonds with a very specific fact situation, and if the healthcare group could come back with some very specific fact situations, that would be very helpful in helping us come up with very specific Q&As that could be added for the next go round for that. So this is the perfect group to make sure that you're aware that that is the kind of thing that we're looking for. So we are very much open to that.
Okay. Yeah, I think we'd be happy to come back with some of those specific examples. The healthcare expert panel is working on that. And I think even in the context of grants and contributions, while I don't think it's possible to write Q&As that would address the huge variety in the way that grants and contributions are awarded and the terms of those awards, perhaps there could be some scenarios put forward in Q&As that, again, just might clarify the board's thinking in how that definition is interpreted.
Thanks, Chris. Appreciate that. And like Roberta said, I think now is a good time to be doing that. We're kind of, I don't want to step on our implementation guide update that's coming a little bit later, but that's close to being finalized, but that means we're in the process of seeing, do we need one next year? And therefore we're accumulating questions. So, this next month or so, Emily probably give me a better timeline. It is a good time to get all that stuff to us so that we can start the process of getting them in an implementation guide, because we certainly want to help. And these are great ideas for things that would make a lot of sense to go in there. So thank you.
Okay, thank you.
Anything else on that one? All right, how about next is financial statement implications of the current federal funding environment. Tracy Cooley.
Yes, good morning, everyone. So our expert panel group discussed the potential financial statement implications related to where we are now with some of the unknowns with federal funding and what preparers and auditors maybe need to think about as we think about the current environment. So we compiled a list of potential issues. And again, these may or may not occur, but we're trying to be proactive. And they're basically in 4 different topic areas. One is revenue and AR, accounts receivable. One would be related to GASB 102 or going concern disclosures. The third is asset impairment. And then the fourth is MD&A. So I'll take these one by one. From a revenue recognition standpoint, there are 3 areas that we considered. One would be potential collectability issues. So should there be considerations related to collectability of accounts receivable from other governments? Now, obviously, it's a judgment call related to allowances against receivables from the federal government or state government. And it would be the facts and circumstances related to a particular preparer. But it seems that this area is certainly worth paying attention to when it comes to preparers and when it comes to auditors as far as the allowance against certain receivables. The second area from a revenue recognition standpoint relates to modified accrual, and it's the availability criterion. And really, if there's a slowdown in payment from the feds back to the states or local governments, does that impact when you can recognize the revenue? Is it available? So if there's a slowdown in payments, would it fall outside the availability? Would it not be available to pay current liabilities when they come due? So again, we think this is an area where there should be some special attention, this year going forward to see if maybe grants were paid on time, but is that still the case? So there could be some changes related to what we're seeing on the revenue recognition as well as the statement of net position side as well, or balance sheet. The third area on revenue recognition relates to the Inflation Reduction Act and tax credits. So it's really a combination of the first 2 revenue issues that I discussed, where are there collectability issues related to the Inflation Reduction Act tax credits, or would there be an availability issue? And the other area related to an Inflation Reduction Act is, will the law change? So will there be some implications related to what's perhaps recorded as a receivable or expected by a government, and then the law changes? So there could be some issues with that as well. The next topics relate to GASB 102 as well as going concern. So from a GASB 102 perspective, would there be some potential disclosures related to a concentration? So, if the government is vulnerable to risks from concentration related to federal funding, and that's material and would certainly be a risk that would need to be disclosed. So 102 coming out right before these federal challenges is timely, I would say, if nothing else. The same can be said about constraints. So are there limitations on the use of federal funding that could cause issues with current programming? So 102 disclosures would certainly be something to consider if there's a material portfolio related to federal receivables that are coming to a certain government. And then, of course, going concern, if it reaches that point, it would, I'm talking more about the GASB 56 guidance rather than anything contemplated on severe financial stress. But it's really going to depend on the reliance of governments on that federal funding and if there needs to be additional disclosure. The third area would be asset impairment. And again, if we think about a scenario where there's a higher education institution or a healthcare institution that has certain assets that are purchased specifically for research projects, or there's a building that really is just research oriented. So really thinking about, what is happening if the programs end and that research is not being conducted. So is the asset is it impaired? Is it more than just a change in demand for the asset? Or is it a change in the manner or the duration of use? So really some considerations related to some of the assets that are used to fund or helped fund research projects. And then lastly, MD&A. From an MD&A perspective, what needs to be included in MD&A from the preparers? It has to be factual, it has to be facts and circumstances. It can't be speculative. So certainly people may think they know where the federal government is headed, but clearly it would have to be something that's based in fact. So just a kind of reminder from that standpoint. So those are the topics we've covered. We're certainly really interested in anything that the GASB staff is hearing as well related to this. So if there's any other scenarios besides these, we'd love to hear those as well.
As I was sitting here writing down the topics you're just saying, I think I'd probably say those are the right ones. Those are the right areas. I think when you first think about things like collectability, you first think, well, collectability of the federal government. Wow, that's a thought. That's a new thought, right?
It is.
But it is a thought. It is judgment. There's clearly not one right answer. There's clearly going to be facts and circumstances and judgment. I think it's probably different based on the grant agreement and the binding arrangement. I think a direct pay IRA scenario might be different than FHWA money coming from GDOT, but from US DOT. But I think it's probably something people got to think about and got to think about whether or not there's a collectability concern there. But it's probably right to be thinking about it. And it definitely, you said it, it's definitely judgment. I think the availability period is the one that could sneak up on people and catch people if they don't pay attention to that. I think, as we all know, I think governments have different availability periods, especially when it comes to grants. Depending on what yours is, you could definitely be collecting that money outside the availability period and therefore have an adjustment to make. And there's governmental funds that if you don't pay attention to, that could sneak up and bite you. And I don't really know how many local units of governments are thinking about that related to the federal money, because while it might come at a different pace. But I guess that depends on what your availability period is. So I think that one's very relevant. I would think on Statement 102, we've talked about Statement 102, and I do think this is one where it could prop up. I do think you probably have to have a scenario where you think the federal revenue to your jurisdiction is a concentration, right? I do know that, and I know you know this, but you said material a minute ago, concentration is going to have a substantial impact, not a material impact. So that it's going to have to be a big amount of revenue, and you pretty much have to be thinking you're losing a substantial portion of it, right? So it wouldn't just be that you have to look at that entire federal grant bucket, if you will, and how much of that might be a risk, which kind of a little bit goes back to the other scenario. But is it outside the realm of possibilities that someone could have a 102 disclosure because of what's going on at the federal level? I don't think it is. This is a perfect example of 102 being about, you have the concentration constraint, that you could have substantial impact. You need the event. Well, we might be having the event right now, which could be causing you to get there. But the one thing about 102 is, y'all know, there's a lot of judgment in 102, and there's a lot of judgment about whether or not that event is really more likely or not to occur, there has occurred or will occur, and there's judgment there. So, but I do think, especially some of the folks right around the Beltline, right around the DC area, they could be highly dependent on some of that federal money. So it's possible, definitely. And I think what you said about MD&A is right. So I do think that all this stuff going on the feds is probably creating an area where you're having to think about some things related to federal grant money and the flow of that money that maybe we've probably never thought about before. But I think the way you're articulating is right. And there is, and somebody mentioned this to me earlier this morning, there is this, there's that notion in NCGA 6 and Statement 6 about, well, if there is something, we talk about just broad disclosures. Well, there is this concept too, that if you think there's a disclosure that you need that would be misleading to not have if you didn't do it, you could probably look at that NCGA statement and get there, even if it was outside of, let's say, 102, and it was just a broader disclosure. But I think this whole world we're in right now is going to cause a lot of people to have to think about whether or not something needs to be done or something needs to be adjusted. But I think your categories are exactly right.
Tracy, the only other one I would say, and I don't think it's very typical, but going concern has an extension of 102 in a way, right? I would expect smaller nonprofits might be experiencing that more than governments, but if I were creating a list, I might put it on there just in case. And then as I thought about your list, let's take the IRA tax credits kind of out. Is there anything in guidance or implementation guidance that you think we should be thinking about? Because certainly, as Alan kind of talked about, we've been talking about these same things. We feel like the guidance is kind of there and appropriate and can address these issues. Outside of the IRA tax credits, we have for a while tried to get answers at the federal government to be able to provide some guidance there, and it's only changing. And we'll keep paying attention to that one because I know that I'm aware of that one. But other than that, is there something you think guidance is limited for, or we should be thinking about helping with?
In my opinion, no. I think the guidance is there. I think Alan really hit it on the head where the guidance is there, but we haven't had to think about it in some of these terms yet.
Sure.
So I think that honestly is where we are.
That makes sense. And that's helpful for us as we're on the road, giving presentations and GASB updates. We can highlight some of these things or, environmental challenges that people need to be thinking about. Just, I know all of you do as well. So thank you. All right. Anything else there from anybody? All right. We had the public sector resource project update, the study that NASDAQ and AICPA did. Mary?
Yes, thank you. I think when we were here last spring, we talked about this report. It was in process. It was issued last October. I'm pretty sure we shared it with the board. I know we've chatted kind of informally with Joel about it, but thought it would be informative today if we could just share with you what the final results that we found in the report were. First of all, why did we even do this project? You all, I'm sure, if you're reading anything about the profession right now, know that there are pipeline issues broadly. It's not just in the public sector, and there have been significant efforts going on at the AICPA relating to those, including things like time and cost of education and very broad issues. At the same time they were working on that, there were a number of news articles generated about specific issues in the public sector. And our leadership thought it would be a good idea for us to take on a project to see beyond the issues that we already know about broad. Are there things going on in the public sector that may need attention? And so that's what we were aiming to find with this project. We went out, did some focus group. I should mention it's joint with NASAC. They were obviously very interested as they have significant issues in their sectors. And we decided to start out with focus group meetings. We met with a wide variety of CPA firms that practice in this area, government organizations, both large and small. We met with academics. We met with students. We talked to a lot of folks and then developed a survey that went out, and we received about 1,000 responses or close to it. And I'd say half and half. It was about 50% responses from people working in government and 50% from the firms. And so we got a lot of data back and spent a long time analyzing which the culmination is this report that we issued. And there basically were 5 key insights that we came away with. And again, this is beyond the broader issues that the AICPA already recognizes are out there and are working to address. The first is that CPAs are not always valued within the public sector environment. And the feeling that we got from the survey results is that was above and beyond what you might see in the private sector, right? There was just a general feeling that CPAs were in higher positions in the private sector, more recognized, and not, legislative bodies and others didn't necessarily understand the benefit of having them on board. Obviously, resource and funding constraints was another big issue about why it's challenging to get CPAs. And there's a whole slew of reasons for that, which I know we all are aware of. And right now it's probably getting worse and not better. The additional technical expertise adds a layer of complexity. So, you know, I guess governments, when they're trying to hire people, some of the candidates that come in don't have governmental experience or backgrounds, and finding people that, are willing to come on board and learn, not just, the GASB framework. In the firms, it's the same thing. They've got to find people who want to work in the GASB area, but also aware of the additional auditing standards that are involved in these engagements issued by GAO, the government auditing standards. So that can be a deterrent. There's room for improvement related to audit requirements, hiring practices, and recruiting in government. So, lots of feedback on trying to apply for government positions and having to fill out applications that are like 30 pages long. And, just some of the systems are antiquated, and that also results in challenges getting people in. And then finally, on the firm side, CPA firms do not always emphasize the importance of or invest fully in their governmental audit practices. So those are the 5 key areas that we learned about, and then we spent a lot of time trying to come up with recommendations relating to this issue. And I would say an overarching key finding that we had is that these issues have been a long time in the making. It is more exacerbated right now because of the pipeline issues, but some of these issues have been around since I've been at the AICPA, which is over 30 years, right? So it's something that needs a collective effort by a lot of different stakeholders to get it right. So the AICPA is going to do what we can on our side, but we also believe, other organizations that represent governments, the firms themselves, states, all should be reading this report and taking information from it and trying to incorporate it into what they're doing. Specific to standard setting, there was one recommendation in the report under the technical expertise category. When I say standard setters, it's not just GASB. We also have GAO that issues auditing standards specific to the government sector. And the recommendation was basically about limiting differences between public and private standards to the extent possible, and also considering getting more input from smaller governments. So I'm not going to go through all the recommendations. There are quite a few, but I would encourage, if you haven't looked at the report, that you do so. I can just say also, more recently, we've seen a lot of reports about especially smaller local governments not being able to get auditors to do their audits. That's been out there in the news. We've been hearing it from some of the state societies and otherwise. And really the report talks about this and the trifecta of challenges that CPA firms face when they're out there. And one is ensuring that they can have enough staff on their own staff that have the governmental expertise. 2 is auditing a potentially unprepared client. That makes some of these engagements less attractive. And then finally, and probably if you were to poll our group, this came up quite a bit yesterday, earning below market fees. So the trifecta of those issues is impacting, the ability of some governments right now to get auditors. And we are going to be stepping up our communication efforts at the AICPA. We're trying to develop a plan maybe to work with the state societies. We're hoping that NASAC can step up their efforts to educate the states, and certainly other organizations that represent local governments. Hopefully they can chip in and help with this too, because it really is going to take a kind of an all hands on deck approach to address some of the things that are in the report. So that's where things stand. And if you haven't read the report, I hope that you will do so.
Thank you, Mary. And I'm sure, I know Joel will have some comments on back of what I say here, but I will say that I know at least him and I have both read it. I personally think it's excellent. I think a lot of the stuff in there is spot on. I will tell you that every time I go around and doing all the GASB update speeches, I will say, one of the first questions I ask everybody is show of hands, everybody that has enough resources. Almost no one
I know.
ever raises their hand, like almost ever, right? And the second question is, do you have enough work to do? Do you need more work to do? And almost no one raises their hand. But that just reinforces what you already know in the report and what you're already going through. So I do think that's part of it. But I think the report lays out a lot of things that we have to, in the government space, resolve. Value prop probably being the biggest, most important one.
Yes.
And it's just, that's a very different conversation, right? I think in the private sector, the CFO and corporate controller understand part of their job is to not just issue the report, but bring value to the company. And I'm not sure that always resonates in the government space, that you know, the finance director understands part of his job is bring value to the government. So but that's a value prop conversation, right? And so I don't know how to solve that, but the report's awesome. I thought it was a good read.
Good.
Yeah, I will add on. I agree. I appreciate all the effort that you all went through and all the people that participated in it. I agree. It's a really good report. We have all read it. I provided it when it came out back in winter, like late fall, whenever. I provided it to all the staff and the board, so they all have it. We even provided it to the FAF trustees. Michelle Waterworth came to a FAF trustee meeting and kind of talked about this even before it was finalized, because we were just talking about with the trustees, you know, public sector resource shortages, because it's something I talk about a lot with the trustees and with everybody, that we remain very aware of it. And so we've, you know, hopefully you see that the board has worked hard to set a really high bar for us to ask you to use those resources to implement a change in GAP or an addition to GAP, because otherwise you wouldn't have to do anything. And now we're making you do something, whether it's an auditor or a preparer. And so we want them to be significant improvements. And so our agenda is smaller than it used to be, but the things we're working on, we think meet that high bar. They're very impactful things. And so that's part of us trying to be responsive to the things that are in this report and just generally the resource challenges. We do think about how we interact with the FASB, or when we differ for the FASB. I look at Jeff, because Jeff is one of our main ones that is always at board meetings saying, well, the FASB does this, and he wants to understand why we're different. So we do try to limit the differences, or at least make sure that we understand why there are differences and not just totally do our own thing with blinders on. So we're very aware of that and trying to you know, listen to the recommendations and implement them. You know, I think that there are other things we're doing to try to not burden or take away burden on resources. Concept statement 7 at the board meeting yesterday. I don't think is this on the agenda?
No.
Yesterday, the board and the tech plan approved a pre-agenda research project for reviewing the existing pension and OPEB note disclosures through the lens of concept statement 7. As most of you probably know, right, that we undertook research related to note disclosures, understanding that the volume is high. Many years ago at this point, Lisa Parker laid this out really well in the meeting yesterday. And what the board decided at the time to do with that, because yes, the volume was high, but everybody had their favorites, was revisit the conceptual framework about what are the rules for the board to require a note disclosure, for an item of information to be required to be a note. Concept statement 7, it's always been essential. Concept statement 7 left that, but really better described what essentiality means. And any new project that we've been working on has been using concept statement 7. And we really go out to users and try to make sure that a breadth or depth of use them would use that item of information in a meaningful way to impact their decision making. And we try to get information from users to tell us that. But that doesn't help with all the existing disclosures. So we kind of have made this commitment to go through in some stage form all the existing note disclosures. It will take us a while to do that. But one of the first steps of that is this pension and OPEB, which is one of the high volumes. We've got PIRs, just finished one on pension, about to complete one on OPEB. We think this is a good time to do that more specific, detailed research to inform the board. It'll take us maybe a couple of years. The plan called for us to maybe be done at the end of 26 with that outreach and a research paper presented to the board, and the board will decide what to do with it at that point in time. So we are very aware of the resource challenges. We're trying to still achieve our mission, improve the financial report, but do so in a way that limits the impact on all of you and your clients as much as possible. So thank you for the work in the report. I thought it was really good.
Yeah, thank you. I like the sound of that project that you're referring to, so.
Anybody else have anything on that? All right. Speaking of GASB projects and proposals, we can move on to some of our more recently issued due process documents that you guys have provided comment letters to us on, but we love to hear the thoughts that you have on a couple of those projects. The first one being the preliminary views document on infrastructure assets, which we actually started redeliberation on this week. Jody, I think you are walking us through some of your thoughts. There you are.
Yes, thank you. So I don't know that we have a lot more than what we provided in our testimony and in our comment letter, but to revisit that, when we read through the preliminary views, we did have some concern about some of the proposed new disclosure requirements and whether they did meet the essential threshold of concept statement number 7. So that there is that concern. There was concern about the cost benefit of some of the proposed disclosures and RSI, and whether or not, governments going and coming up with some of this information, if it really resulted in what the goal of this preliminary view is, with demonstrating infrastructure and its condition and maintenance and all of that to be communicated in the financial statements, if some of these disclosures really did that. And for some governments, depending on their size, would they even be able to come up with some of this information? So with that cost benefit perspective, is it really there for a lot of governments? And then, sorry, I just lost my train of thought. And I know that the board spent some time this week deliberating over the definition of an infrastructure. So, I know that is out there. There's confusion around the whole concept of infrastructure and whether what is in this preliminary view actually will accomplish what the board was hoping that it accomplishes.
We spent a couple of hours on that the other day.
Sounds like it was a great conversation.
It was.
So yeah, we really didn't have anything new, just wanted to reiterate our concerns about whether these new disclosures really met the definition and whether they really provided the goal of what the board is going for.
Scott?
With the board not having deliberated except for earlier this week on the definition, I don't have a lot to add, except I guess I would say that, and I'm sure you saw from the other comments that were provided, that, that your concerns related to disclosures were provided by other commenters too. And the board will currently, we're looking at probably July, that they'll be looking at talking about the disclosures and, those concerns.
Only thing I would add to that, though, Jody, is we did implement concept statement 7 in this, and we got 70 some odd page paper on those disclosures that we ended up putting in there that reflected for the board outreach that the staff had done that showed whether a breadth or depth of users would use it, and gave descriptions of how they would use each of the items of information that we ended up including in that disclosure. So the board at least made an initial tentative decision that they felt it was essential based on that outreach and the information we had. Otherwise, we wouldn't have put it out in the PV. But that doesn't mean we aren't learning things. And I think we have learned things from the responses. We present things in one way, and even talking to users, some of the words we use and what they said to us, might mean different things. And maybe we're talking past each other a little bit at times. So we're reflecting on all of that. And that's what we will do in the coming redeliberation.
And we do recognize that and we do appreciate that. And I guess another question we have is some of that information, is the financial statements really the best place to have some of this information? Does it really belong in a financial statement that is as of, a specific date and looking back to a year of activity? So might be good disclosures and good for some users to know, but is the financial statements really the best place for that information to be?
Sure. Yeah, I would say in our world, good to know. Just we're trying to get a higher bar than that. But I can appreciate, is the external financial report historical the right place for some of that? Are things we need to think about and will think about. Anything else on infrastructure? We appreciate your comments and your insights. It's very helpful. Exposure draft on subsequent events. That is Chris Salem.
Yep. Thanks. So thank you for taking on the project on sub events. We appreciate the exposure draft, and hopefully you found our comment letter to be supportive overall of the project. I know in particular that the guidance on the date that the assessment would be performed, the available to be issued date, was contemplated with auditors in mind, and as a group of mostly auditors, we do appreciate that. I think we had just maybe a couple concerns in our letter, which I'll just quickly go through. I know when it comes to that available to be issued date, we did have some concerns about the all approvals necessary for issuance guidance. I know the board talked about that yesterday and potentially made some decisions that might allay some of those concerns. I think another area of comment was the specific list of non-recognized events that would be made to the extent that they are significant. And I think we commented on the debt transactions, just perhaps providing a little bit more clarity around that. And then the enacted tax rate guidance, which we did recommend potentially removing. And then the last item that I think we commented on was the proposal to remove the current guidance in GAAP on reissuance of financial statements. We think that guidance is helpful, and so we just suggested that it be retained within GAAP. I think today, to the extent that auditors are involved in a reissuance situation, the auditing guidance and the GAAP guidance work well together. But potentially removing that guidance from GAAP, I think, would remove a trigger for management to consider whether additional subsequent event disclosure might be necessary in reissued financials to ensure that they are meeting that essentiality, guidance that you were talking about earlier. So I think that's really all we have on this point. We'll continue to follow the redeliberations.
Great, thank you. And thank you for the comment letter. Always appreciate the feedback. And certainly on this project specifically, there was a lot of hope to align in some places with the auditing standards that maybe previously there were some inconsistencies. We did, as a kind of brief update, we did start redeliberations yesterday on this project, and our first topic was the subsequent events timeframe, talking about what the end date is, the conclusion of that evaluation period. The board tentatively decided to remove the word all from that criterion related to approvals. So we'll say approvals necessary for issuance, and then add a more robust discussion in the basis that talks about that there is judgment involved in determining whether something truly is an approval necessary for issuance. Something may be labeled or referred to as an approval, but if the government has already provided the statements, then that subsequent approval for the thing that they're calling an approval is not really an approval necessary for issuance if the statements have been issued. So I'm hoping to clarify that there is this notion of judgment still, and perhaps, although subtle, removing the word all maybe removes an emphasis that maybe was conveying something that we didn't quite intend to convey. With respect to the non-recognized events and the specific list, the board hasn't undertaken redeliberations on that. So that'll be forthcoming, and we'll certainly consider that feedback along with other feedback that we received relative to the explicit items that need to be disclosed. And then with respect to reissuance, perhaps maybe just a question on that point. So I think this was another area where we were trying to align with the auditing standards. And so I think you mentioned, to the extent that the auditor is involved in a reissuance, the auditing standards cover it. I guess looking at the other circumstance where an auditor is not involved in the reissuance, if GAAP requires evaluation of that time period, and there is something that meets the definition of a subsequent event that should be disclosed, how does that impact the auditor if the preparer needs to add that disclosure?
Yeah, I think the answer may differ based on the firm, but in my own experience, to the extent that management performs an analysis and identifies a subsequent event that is non-recognized, not evidence of an error, and feels that it is necessary to make that disclosure, they will add that disclosure to their current sub-event disclosure, and it's usually labeled unaudited, so it doesn't impact the auditor's opinion, it doesn't change the date of our opinion, but importantly, the information is there for the potential users of that report.
Okay, great. That's very helpful. Anyone else had anything on that? Otherwise, we'll move forward with the redeliberations on this project. So redeliberative meetings through the fall timeframe, and then if the project proceeds in accordance with the technical plan, the board is expected to consider a final statement for approval at the end of the year.
Thank you.
Thank you. Now we'll move into updates on GASB activities. So I'm going to turn it right back to Emily for an update on our implementation guide update.
Let me get my papers rearranged over here. So the implementation guidance update project, where we are, the board did the redeliberative meeting. There's only one redeliberative meeting on this project after the comment period ended. That happened in March. And so again, appreciate the expert panel's feedback on the project. I have good news to report, I guess, in that, in reviewing and refreshing my memory on what exactly the panel commented on, the proposed pre-ballot that the board reviewed at this meeting just earlier this week reflects several of the recommendations that were made in the comment letter. So I just wanted to highlight a couple of those that are changes from the exposure draft. So specifically in the pre-ballot that the board considered this week, we are not proposing to carry forward 3 questions that were proposed in the exposure draft. Those were questions 4.2, 4.3, and 4.10, and I don't expect you to remember what those were. So question 4.2 was the question that was related to the format of MD&A. We are not proposing to carry that forward, and basically determined that based on the respondent feedback and volume of respondent feedback, that it would be perhaps more preferable to consider that issue in category A if the board determines that the format of MD&A is a critical issue to pursue. 4.3 was the question and answer related to capital assets and reporting assets held for resale, certain assets held for resale that are part of a governmental program as capital assets. On this one, it wasn't that the staff or the board thought that that answer was necessarily wrong. However, based on the respondent feedback that we received, there were several follow-up questions that came to light, particularly related to how to depreciate that asset, what's the asset's useful life, that we felt would be better considered in a comprehensive manner so that all of the guidance could be together. So I'll say that one's maybe more on pause than just permanently not carried forward. But we are not carrying it forward at this time in the final statement. The other question that we're not carrying forward was question 4.10, and that was a question related to the scope and applicability of Statement 87 to third-party obligors and a conduit debt obligation. Based on respondent feedback, there was some confusion about what the result of the answer would be, and we also believe that that circumstance is very limited in its applicability, and so maybe raising more questions than answers to a circumstance that's really not prevalent. So we determined to not carry forward that question and answer. Relative to some of the other items, we made some somewhat substantive editorial changes to the pilot's question and answer to help clarify and help better contrast the two circumstances that are presented in the answer. We also made clarifying edits to some of the other Statement 103 related questions, questions 4.5 and 4.6, which are tied into the lease operating, non-operating questions, and then question 4.13, which was about conduit debt as well. So made some edits in those. We certainly heard in the feedback and from other respondents that there are outstanding questions on subsidies, which we talked about earlier. So we certainly have our eye on those, continuing to monitor those. As Joel alluded to earlier, we are about to, you finish one thing and the next thing's already started. We're about to start our process for evaluating whether there are questions and answers that would need to be considered for a 2026 update. So certainly if you have feedback for us on those, we would appreciate that. And the timing typically works where we would be presenting proposals to the board in the late summer, early fall timeframe. And so we do start working on that within the next month or so is when we're starting to pull together. Do we have enough questions and answers? What are the nature of those? With respect to this guide that we almost have wrapped up, the timing of that, the board considered a pre-ballot at this meeting, and then the ballot will be considered in June. And if everything goes according to plan, they'll consider it for clearance in June.
Thank you, Emily. And I think we want to thank the board and the staff for taking all of our comments into consideration during your deliberations. We're all very pleased with the updates that y'all have made to the implementation guide, and we look forward to y'all releasing it. So thank you very much. We appreciate y'all's help and work on this.
Great, thanks. Anybody else? All right, next is our project that's out with the preliminary views right now. Severe financial stress and probable dissolution disclosures. Deborah, if you want to start us off on an update.
Yeah, thank you. So our project on going concern uncertainties and severe financial stress is re-examining the going concern guidance that's in Statement 56. That guidance did originate in the auditing literature. And our research showed that stakeholders have different interpretations of what going concern means, particularly in the government environment. And that has resulted in diversity in practice in applying that guidance. Our research showed that some governments get into very great financial difficulties, but they continue to operate, continue to provide services, and don't end existence because of that. Other governments do cease to exist as legal entities, but often for reasons other than financial difficulties. They could be political reasons or operational reasons for that dissolution. And so the title of the preliminary views that was issued in March, Severe Financial Stress and Probable Dissolution Disclosures, was very intentional to try to convey the proposal. The overarching idea in the preliminary views is that these would be two independent ideas and two different sets of disclosure requirements based on whether a government meets this criterion or that criterion, or both in some cases. For clarity purposes, we did not use the term going concern in the preliminary views to clarify and highlight that these are two different things. So severe financial stress, disclosures would be required if a government is near or at the point of insolvency as of the financial statement date. And the disclosures required for that would include the reasons and causes for that condition, actions taken by the government, and known effects of the condition. For probable dissolution, disclosures would be required if it is probable that a government will cease to exist as the same legally separate entity within 12 months of the date the financial statements are available to be issued. And if that's met, the disclosures that would be required would be a statement that there is this uncertainty about its existence, the reasons and causes for it, actions taken, and information about assets and liabilities. So the comment deadline is June 30th. We are taking both traditional comment letters, or we have our electronic feedback form that we've been doing to help encourage broader participation in the comment process. We are also hosting a series of public forums later in the summer, a mix of in-person and virtual events. That we're planning to hold these in a roundtable type of format, hopefully with a mix of preparers, auditors, and users sitting around the same table and having a dialogue about the preliminary views. And the deadline of notifying us of intent to participate is also June 30th for that. So it's still relatively early in the exposure period. We don't have a lot of feedback yet, but we are looking forward to seeing what we do here over the next couple of months.
Jeff?
Thanks, Deborah. And as you all know, this is a topic very near and dear to our heart, and we're at the early stages. It's been a little bit of an exercise of like herding cats, because we have a lot of interested cats with different meows or views, you know, on this topic. But at any rate, so we're not at the point of having specific thoughts, but we did want to share some at least concerns a little bit here that we are talking about. And the first one that we've had a lot of conversation is the potential disconnect between the concept of going concern and the auditing literature versus what's in probable dissolution and severe financial stress. And the first question that we've asked ourselves, does going concern include both dissolution, that concept, because of stress, or does it also include not being able to meet your obligations when they come due? And so most of us in the auditing community, I'm going to say, believe it's both. It could be and or, but we think there's a lot of confusion, and that goes back to a paper we wrote 10 years ago and sent it to Dave Bean saying, hey, going concern is really misunderstood in the government space. You know, is there something we can do to do it, to help it? So as it's written, it feels like it's somewhat disconnected, the terminology intentionally disconnected from going concern. And so we're just talking about that. And then as it relates to a quote, early warning indicator, we're thinking it's actually taking a step back from where we're at today. As we think about the auditing literature, we're thinking it has a look forward period for both meeting your obligations as well as continuing to exist as a legal entity. And then if I understand how this is reading right now, and that would require us to evaluate whether there's substantial doubt for at least a period of 12 months, whether it's FASB 12 months from date of available to be issued or date of the balance sheet today. We think that we would lose that potentially in the severe financial stress because it's at or near the balance sheet date. And so that's the conundrum that we're all trying to work through and think about. How do we connect the going concern concept with what you have in that standard? Because our auditing standard is really built on the auditor looking at the framework and what the requirements are of the framework for going concern. And so it's just something that we're trying to figure out. Other than that, again, at the very early stages, we have a passionate group of people that are put together here to talk about this, including the Auditing Standards Board has a task force on going concern, and we brought them into our group. We're looking at doing potentially a joint letter with the Technical Issues Committee and that subgroup and the expert panel. And so we really look forward to talking to you about this and seeing how maybe the views could be, come together.
Thanks, Jeff. And we, certainly I'm and all of us are very aware of the connection between the auditing standards and our standards as it relates to this topic. So we're appreciative that you're getting the whole gang together to provide us with input. We did talk a little bit about this project with the AITF back in November, I think. So they are kind of aware, but I'm glad that they're, somewhat being looped in as you're thinking about them and your responses too. So very much appreciate all the effort, and we look forward to the comments. Before we go to the next one, Jeff Markert is, I've known Jeff a long time, consider him a friend as well as certainly respect him as a colleague, and he's retiring in September. And this is the last time as part of the expert panel we'll meet with Jeff. And I know that I personally know you've been helpful to the GASB for many, many years. I don't want to say decades, although it might actually be. I'm going to say many years. And I know that as a group, we want to collectively thank you for your collaboration, your contributions to the standards. Certainly, I know implementing the pension standards profession-wide, you were vital to making sure that happened, in a very professional way to help the audit profession and help the GASB essentially in its implementation with all the preparers. So a lot of contributions to governmental accounting, a lot of contributions to the GASB. So thank you from all of us at the GASB for all you've done.
Thanks, Joel. Appreciate that.
Sure. Best of luck. Hope you enjoy retirement, and do the things you want to do. But I do kind of look forward to a comment letter or an email from citizen Jeff Markert. If we don't get it, it's fine. It's fine. You've done enough. You deserve whatever, but I wouldn't be surprised. All right. Moving on to our next update is revenue and expense recognition. Pam, if you'll start us off, please.
Thank you. So I was looking back last year when we spoke to you, and at that time, the board was about to move on from deliberations related to the recognition of Category B transactions to discussing the recognition of transactions with performance obligations known as Category A in the project. And more recently, the board has also begun to discuss the third component of the revenue and expense model, which is measurement, which is relevant to both Category A and Category B transactions. So as part of those discussions, the board has emphasized the need to develop clear and simplified guidance to support stakeholders in effectively operationalizing recognition and measurement guidance that may result from the project. As that relates to transactions with a performance obligation, the board believes that a path for such simplification may need to occur after their deliberations of recognition and measurement. This is because for a simplified model to become clear and supportable, the board believes that the principles-based underpinnings of both the performance obligation idea and measurement need to be developed. In other words, the board envisions that a simplified model applicable to certain government transactions could be developed based on the major principles of the performance obligation model. Of course, the idea would be that this type of approach would ideally provide our stakeholders with a viable tool to both address complex revenue and expense transactions, and at the same time, a more simple model for less complex transactions, which would be, we believe, of great benefit to the stakeholders. So consistent with this approach, the board's been working through conceptual underpinnings of the performance obligation model and how those underpinnings apply to both the government environment as well as our conceptual framework. And so some of the highlights of the board's tentative decisions related to the recognition of Category A transactions in terms of those conceptual underpinnings have focused on the recognition unit of account for the recognition piece and whether it meets the definition of an element of financial statements. Another conceptual type thought recognition unit of account the board has tentatively decided is the distinct good or service, which is the performance obligation. The board has discussed the satisfaction of a performance obligation occurs when or as there's a transfer of control, which is of those distinct goods or services. And also that the control over goods or services is described as the customer's ability to utilize the present service capacity of the goods or services by determining the nature and manner of use of the present service capacity embodied in the resource. So they've really been focusing on these conceptual underpinnings and trying to work through how those, how they want to consider those in terms of the applicability and the operationalization of how to work the model to develop those kind of foundation for future discussions. Regarding those application things, they've also gotten into those, as they've moved on from some of those conceptual underpinnings to discuss the criteria to identify a performance obligation, the two modes of transfer of control, which of course are over time or point in time. And then also we're hopefully getting close to some tentative decisions about the determination of the transfer of control over time and the criteria that identifies when the transfer of control has occurred over time. At its March meeting, the board also began its discussions related to the third component, as I mentioned a moment ago, which is measurement of the model. And again, working on first thinking about some high-level principles before they get into the more application type discussions. And so some highlights of those tentative decisions regarding measurement, they began by discussing the conceptual principles of measurement uncertainty and the importance of the use of estimates in those measurement thoughts. And then lastly, yesterday, the board tentatively discussed the impacts of significant financing components for transactions in the scope of the project. So that's kind of what we've been working on in the last year.
Thanks, Pam, for the update. I have the privilege of being on your task force, so I am pretty up to date on all the papers, the many papers that the board has been discussing. We, and not just me, but several of the panel members continue to follow the deliberations. I think we're very interested to see where measurement goes. We did have a little bit of discussion within the panel about what the next exposure document looks like and when that comes out. I believe the board had received some feedback back in 2021 with the original PV that perhaps another PV could be helpful. And I think depending on where measurement goes, to the extent that that is very complex or very different from the guidance that exists today, maybe a PV could be helpful in obtaining further guidance on the direction of the project, but I think it's too early to tell or to make a recommendation at this point. So we continue to follow the deliberations, and we look forward to commenting on whatever the next exposure document looks like.
Great, thanks.
Thank you both. Anything else there? All right, next is the post-implementation review activities. Tammy.
Thank you. So last year, you may recall at this meeting, we were at a very exciting point in that we were on the cusp of getting ready to issue our pension post-implementation review report. And that was particularly significant because that was the first report that was completed under a process that was approved by the FAF in 2020. And so it was an effort to embed PIR in the standard setting process, and that meant that we had to figure out how that process was going to work. And so we were very excited to get to the completion of that report, and that report was issued last May, and we've had a couple of podcasts since then to describe post-implementation review and what it is, and also a separate one to talk about the PIR results related to pensions. And I trust when we mentioned this a year ago, that as soon as that report came out in May, that you all read it. This group probably did read it in earnest, that 50-something page report. So today what I thought we would do is to talk about the other post-implementation review projects that we've had and where we are in the process so that you're aware of those. And many of you have participated at different points in those PIR efforts, and we are extremely grateful for that and your level of involvement. We have completed a second PIR under that process, Statement 72 on fair value. That was led by Scott Reeser. That was earlier this year. And we have 3 ongoing PIR projects that are, when I tell you the dates when they'll be completed, you'll think, that's really, some of those are a really long time away, but the staff is eagerly working on all 3. So the one that's most current or that is the closest to being finished, Joel mentioned earlier, is the OPEB PIR report, which we will complete late in 2026. And so I'll use that one as an example to talk about the activities and the things that we're doing there. The other 2, and that one is led by Lisa Parker. The other 2 are the PIR for fiduciary activities. That report will be out in 2029, but even still, Deborah Beams, who's leading that project, is working very hard on it. And the leases PIR Statement 87, that's being led by Joe Wickland, and that report will be finished in 2030. But all of those projects, even with those dates that seem like they're a very long time from now, have active activities that are going on in those. So as we think about the OPEB PIR, the great thing about it is that it's very parallel to the pension standards, so that helps the staff in thinking about how to go about the PIR activities. But I thought in describing to you what the activities are, I almost wish we had a visual, but this is a group of shall I say, nerdy accountants, with myself included, who would appreciate kind of a spreadsheet sort of format. If you can think about this in 2 dimensions, one dimension is the stakeholders who we engage with to do this PIR. And remember that our PIR efforts are meant to test to determine whether the statement accomplished its stated purpose, to evaluate the cost and benefits associated with the standards, and then 3, to determine whether there are any standard setting process improvements we might make. And that's a little bit differentiated from trying to make any sort of standard setting changes, which the board obviously could choose to do. But the purpose of the PIR really is to determine at the end, that third objective, whether there are any standard setting improvements. And so as we think about engaging stakeholders in the process, for OPEBs, we have not just preparers, auditors, and users, but also actuaries and plan representatives. So if you think of those in a spreadsheet, and then you think across in the columns, what kinds of things do we do to engage each of those 5 stakeholder groups? And so I just want to go through the list of what we're doing in OPEB so you have a sense of that. The first of those, and the one that probably was completed kind of furthest back in the timeline, were the roundtables associated with the OPEB PIR. And some of you participated in those, and we're grateful for that. Those would have been conducted in 2023, and that included all 5 of those stakeholder groups. That process of analyzing the roundtables is not trivial, and I think our staff who worked on that would tell you that. We spent a lot of 2024 looking at that disparate information and trying to aggregate it and accumulate it together so that we could identify themes and report the results out in a meaningful way. So that work was completed on roundtables in 2024. So that's one of the 5. The second is the archival work that we do. So for every PIR report that we put together, we collect some archival data. And I think we had the conversation last year that sometimes archival data can help you. There are things it can do for you, and there are things that it cannot. But one of the things it can do for us is we can look at financial statements to see, do we see there what we expect to see? Do we see the liability, the net OPEB liability, for example, reported on the face of the statement? Do we see the deferred flows presented there? One of the things that we're doing in PIR is also thinking about how governments exercise the optionality. Do they report items in an aggregated fashion on the face of the statements and disaggregate them in the notes, or do they disaggregate them on the face of the statements? So some of the evidence that we gather is really kind of informing. I like to think of our role in the research function inside the GASB as building a body of knowledge that we can draw on in any project. And so understanding some of the things that are contributing to the PIR objectives also gives us information that we can use elsewhere in the standard setting process. So that's just an example of that. The third of the 5 methods that we use in engaging with stakeholders is surveys. And the surveys that we do, we tend to bucketize them into 2 groups. One group, which is the cost surveys, where we are trying to evaluate what are the costs of implementing the standards, both in terms of dollars and staff hours. And so those were conducted back in 2020. And so those have been completed and those have been analyzed. The other category of surveys that we conduct are related to preparers, auditors, and users. And for the OPEB PIR, where we are in that process, is we have completed the user surveys earlier in 2025 and analyzed those. And so we've got those with a nice bow on it ready to be discussed. And then the next batch of surveys that we distributed, and I feel sure I meant to go back and look at names to see, but I'm sure some of you in the room completed that survey. So that was very recently. So we distributed that survey. It's closed, and we're in the process of analyzing those results. And then the third survey that we'll do outside of the cost surveys is a survey of preparers, and we're currently working on that instrument. So if you know people who you think should complete that survey, please have them do it. We expect that to be out around middle of the year. And that will wrap up our survey work with respect to the OPEB PIR. So those are the first 3 sort of categories of methodology. The fourth one that I'll mention is the academic research that we do, or that we rely on from the academic community. We either go out and look for literature that helps contribute to one of those 3 objectives that's already been completed, or in some cases, we understood with OPEBs that there's not a really great database of OPEB data out there. And what that means for the academics is sometimes they won't study it if it's not out there in a format that they can use it. So we had an academic who had written a work. He had a working paper at the time we did the pension PIR, Say Young Yoon at Framingham State University.
And I reached out to him to say, you did a great piece on the connection between net pension liability and bond market consequences. Would you be willing to do something similar with OPEBs? And so he submitted a grant application. We awarded that grant last year. And so that will give us some evidence. We do things like that to try to help facilitate when we think that the research out there is not going to be sufficient, that maybe the academics aren't engaged in it. So academic research is a piece of it as well. The fifth method that we use is everything in-house that we can get our hands on. And the obvious example of that for PIR that you might think about is the technical inquiries that many of you submit. And so we can go out and look at those and trend those, and we've done that for OPEBs, where we look at what are the types of questions that we got, what does the trend look like, where you would expect it to sort of converge. In the year of implementation, it's painful, but you should expect to see the technical inquiries decline. And so we trend those and look at the detail behind those TIs, and then we use that in the PIR report. So those are the 5 methods that we use, and we stack those in the case of OPEB PIR against the 5 stakeholder groups to make sure that if you think about it in that spreadsheet I referenced, that those stakeholders are represented somewhere in that mix. Then to Mary's point earlier, the other thing that we make sure that we do is that in the archival work, we do the best that we can in other areas as well, is to make sure that both large and small governments are represented. We know that the experience of implementation is different for smaller governments than it is for larger governments, so we try to make sure that they're encompassed in the PIR effort. Then the last thing I'll mention here is in the spirit of embedding PIR completely in the standard setting process, you may have seen that in December, the OPEB PIR team under Lisa Parker's leadership presented to the board where we were in the PIR process for the OPEB PIR. And you will see that on a regular basis as part of embedding it in the standard setting process. We will have regular updates to the board and also to GASAC. So at the last GASAC meeting, that information was shared with them as well. And that's at the heart of that process that was established back in 2020. And then so it's to be determined or stay tuned, I guess, on the PIRs related to leases, Statement 87, and on fiduciary activities, Statement 84. Don't worry, we'll reach out to you and ask you questions about those standards as well. But as always, we welcome your feedback on things that you see in the implementation, and the ongoing relationship and dialogue is very important to us. And so anything that you want to share with any of the project staff or me, we would certainly welcome it.
Brandon?
Yeah, I just wanted to thank you for your contributions on the overall PIR process. I very, very much appreciated the interim update for the OPEB one. It's good to kind of see the progress as these projects are very long. We look forward to kind of seeing final reports and as the process continues and further interim updates on OPEB and leases and more to come. So we thank you guys.
Thanks. Anything else on PIR from anybody? All right, our last update is the voluntary digital financial reporting. Used to call it a taxonomy. This is the official project name. Paulina, if you'll start us off, very much appreciate it.
Thank you. Good morning, everyone. It'd probably be easier if I start with what would you like to hear, but I'm not going to go there. So the last time we talked to you about the taxonomy development, we had shared that we had engaged on it. We had talked to you about what a taxonomy is, the fun complications of having a digital model to accommodate any government, the states or small special purpose governments with a single column, the verticals, the line items, and the intercepts. And we had a really good conversation about it. It has continued to evolve. What we have been focused on is trying to determine, now that we have a sense of what the project is doing, what the technology does. It was even a learning curve for us to understand the technology, but trying to put a path forward into a first exposure document. And of course, not an exposure draft, because this is not a standard. I think of all of you, you're the most suited to understand this is a voluntary framework. It doesn't establish GAAP. It reflects not only GAAP, but the fun part and the fun discussion is it represents something more than GAAP, which is common practice. And a lot of conversations, what is common in common practice is probably one of the most fun parts of the conversation. to be able to help inform that dialogue. We're in the last steps of putting together our taxonomy advisory group. Many of you have been asked to participate. We hope to have the last few stragglers wrangled up next week and hopefully start formally announcing meetings and things of that nature. Because one of the advantages of a group like you would be to be able to put in front of you and say, this is the presentations that we're seeing. This is how the model looks like. Can you react to it? Do you see anything missing? Do you see any governments that do more, or you just think this is a one-off government? Just by start looking at things like, so the way generally the taxonomy we're working through is we have a data sample of actors. We're parsing the information, and then we're doing the data modeling. But then we go to a different set of samples. The benefit of having such a huge data sample with the PIRs is helping, because then we don't have to retrieve anything. Just got to tell me, where's the data sample? And so we use those data samples and we look at a completely different set and go, okay, is this still working with a different group of actors? Is this still holding? What's different? What's new? What we need to tinker, what we need to adjust? And so this back and forth through samples to deal with the practice has been an awful lot of fun, but it's going to have to get a little bit more structure as we move forward. At the moment is the data that we have accessible, the materials we have accessible, and then the importance of exposing all those choices and decisions. We started, obviously, as we talked last year, we discussed this with the framework, with the reporting model framework and the reporting entity framework. So what do you do with the headers? What do you do with component units and that sort of thing? And we thought we had it nailed down, and we were working down the path and working on the line items and working on RSI, and everything was good. And then you started looking at other data samples and you're like, oh, some people are doing this differently. Wait, I need to go tinker with the reporting model, reporting entity again. So this ongoing iteration is really interesting and important, because it's forever going 10 steps forward, 20 back, 50 forward, 3 back. And so it just goes back and forth in the narration of trying to deal with it. So we're in a place where we're going to show the board, hopefully in the June meeting, the reporting entity and the reporting model data is just the headers. And you would be surprised, just the headers. It's taking an awful lot of lift to get it to a place where we feel like, okay, it can accommodate large general purpose governments, small governmental entities, BTAs. I love California and mosquito abatement, my favorite comparison. To just try to navigate the complexity back and forth. We are actively working on line items. We also are planning to bring to the board capital assets. That have been another fascinating discussion, because as you know, you have two reporting requirements to separate depreciable from non-depreciable. That's it. But how many of your governments do just 2 line items? And so by doing the analysis, we're on somewhere between 150 to 200 line items at the moment of capital assets alone, just by observing and data modeling what we're seeing. The module of capital assets will be put in any place where capital assets appear. So it's not a statement of activities thing. It will fall in the statement of activities, in the enterprise funds, in the notes, in the component unit schedules, wherever it's needed. So there's a lot of pliability in the way we're building this taxonomy as a modular thing. Obviously, the statement of activities is an awful lot of fun. We went up with 2 statements, and bringing that to the board as a reporting entity reporting model was like, okay, everything else functioned like this, and then the statement of activities. And so just putting those pieces of data together has been the focus of where we're working on. We're hoping to have a discussion memorandum by December. It's not in the technical plan yet, but we plan to put it in the next tech plan update. It's intended to be a very high level of what the taxonomy is doing, the design. So this issue, reporting entity and reporting model, are the 2 most critical pieces, because if those are not right, then anything is right. And so to be able to illustrate those components, we have selected a few statements to make it work. We put the statement of net position, governmental revenues and expenditures, changes on fund balance, and a couple of components to illustrate the variability. Simultaneously, we have a team of people working on modeling what we like to call it unstructured data, notes to financial statements, MD&A, very different modeling, right? If you're in a statement, it's rows, columns, line items. If you're dealing with the notes and MD&A, it's unstructured text. And so another group of people are modeling that. We have made a progress in a couple of items that we want to expose. Again, the question, and there is granularity. How much do you break the themes and the notes that you want to put in? And so different aspects of the taxonomy entail and involve different types of analysis and consideration. So what we hope to do with this due process document is share some of the insights of the decisions in the granularity and the reporting entity and the common practice to solicit feedback. And then to continue to iterate in this process. I think the last time we talked, I mentioned to you that we have taken the project and separated it in two phases. The first phase is going to include only, and I say that with caution, basic financial statements and RSI. And as I said, only, you know that that's not little. But we at least wanted to put SI to a second phase because of the complexity. But we are trying not to forget it as we model it, because there are things that, like I said, they're modules, so they can be brought up around. So very cognizant of those design considerations. We obviously also expect subsequent exposures as the financial statements continue to build. The first exposure hopefully would be, hopefully we'll be able to make a clear communication to all our stakeholders that this is not a final product, is where we are in the process to elicit feedback about, like I said, the data structure, the examples, the things. I always tease the board, people fixate about the line items. And if my line item is not there, it's wrong. It's not wrong. We can fix that. Of anything, this is probably the most pliable and flexible project I've ever worked on. So if something is not working, we just tweak it and go back at it. This is not like a standard when it's final, it's not touchable. That's not how this works. And so the ability to solicit feedback and work collaborative is a lot more open, and a lot of interesting things are happening. So that's a little bit in a nutshell where we are in the process we're making. Like I said, next big thing we have is trying to put a due process together for exposure. It will be absolutely fun to try to crack the communication code. The way we talk to carbon life forms like you about it is in the accounting way, but we need to expose it also to the taxonomists and the data people. And they don't care about what governmental funded reporting is. They're about type dimensions, extensions, things like that, which you're like, oh, what? And so the communication method is going to be very interesting to resolve, but looking forward to be able to put that in front of people for feedback.
Thanks, Paulina. Kristen?
Thank you for the update. We recognize that this is a challenging project, but we appreciate the GASB's efforts to try to encompass all types of governments and the variety of reports that we're dealing with. So we appreciate that, and we look forward to following the progress of the project.
Thank you. Anything else on the voluntary digital financial reporting project? Questions? All right. Well, before we wrap up, I wanted to mention a couple other things. One is, again, thank you. This is an important meeting. You guys are an important stakeholder and contributor to our process and providing us with information. We do have meetings, interactions, different forums with lots of different stakeholders. We're always trying to get input onto the things we're working on or should be working on. One of the most important stakeholder groups that we have routine interaction with is our advisory council, the GASAC, and we really appreciate Michelle Waterworth as your representative on the GASAC and appreciate your support of Michelle. It's clear she's a very consistent, significant, positive contributor at the GASAC meetings on every topic, and it's clear that while she certainly is bringing her perspectives, it's clear she is funneling input from you guys routinely in those meetings. So thank you very much for helping support her. And it's another way for us to get information from you and the things you're challenged with, experiences, your thoughts on progress kind of throughout the year, in addition to these annual meetings that we have with you. Speaking of the GASAC, one thing I was going to mention, Mary, earlier in our response to the public sector resource paper when you talked about small governments. We recently this year expanded the GASB by 3 organizations, 2 of which in particular, we always try to keep the GASB kind of balance between preparers, auditors, and users, although the auditors are the kind of the lowest, they're the smallest represented. And so we added 3 organizations, 2 of which could be, and I've asked for it to be audit organization represented. That is the National Association of the State Boards of Accountancy, or NASBA, and the National Association of Black Accountants, or NABA. And for both of those groups, in adding them to it, I asked for them, and they did follow through with this, I asked for them to give us an auditor who works for preferably a small firm and has a firm that audits smaller governments. And so that was a way for us to try to get, in addition to your input through Michelle, other input routinely onto the GASAC. And so there are, I was about to say, unfortunately, just it's the way things go. The NASBA representative who did work for a smaller firm, that firm was recently acquired by a larger firm. And so, best laid plans and all that, but we are trying. At least that person comes from that smaller firm, still has those clients, so can bring that perspective. But one other thing that I think to highlight and update and maybe just put in for you to think about, one of the important things I'm sure you're familiar with, because you contribute to it as well, that we do annually with the GASAC is that they prioritize, they all 37 or 36 members vote on what we should be working on. And they do this every year. And we recently did this just about a month ago or 6 weeks ago, I guess, at our meeting with the GASAC. And the results, to me, there are kind of 6 projects. The top 6 are a little bit tiers in the number of votes and kind of the scoring that they got. The top 2 were actually tied at the first. One was cybersecurity risk disclosure. The other was governmental fund financial statements. Cybersecurity risk disclosure, we didn't really talk about it here, but it is on our pre-agenda research recently. So I would be following that. And if you're interested, certainly the team we have working on that research would love to hear any kind of thoughts you have about the work we're doing. We're very conscious there of trying to be responsive to users who are asking for information about what we acknowledge is a very important topic for governments. But at the same time, we don't want to require note disclosure for things that are going to put or add to the risk governments are facing. So we're very conscious of that. I don't know where the pre-agenda research is going. That's why we're doing is to figure out, is there a path forward for the external financial report to provide information on this or not? So we're working through that. Second one, governmental fund financial statements. We got some good input more specifically from the GASAC at that same meeting on that. So the board will be contemplating what to do with that in future tech plan updates. The next tier, 3rd and 4th, were digital assets. So, to the extent you guys are seeing things with digital assets, there's a lot going on with those, with legislation related to, it was pension investments, and we kind of felt like our guidance was good there. Now we're getting these legislation about potential strategic reserves in cryptocurrencies such as Bitcoin. What does that do within our guidance? So to the extent that's becoming more prevalent, you're seeing it, you have thoughts, we'd love to hear it, but it's on our technical plan as a monitoring activity. So it's something we are actively kind of reviewing, keeping our head above water and trying to pay attention to what's going on there and how it would interact with our guidance so that we can jump on a project to the extent it becomes more prevalent and we feel like we need to expand guidance there to address any issues. The other one there's financial reporting entity was another one that was ranked pretty high the year before and probably several years before. I really asked and pushed back on what the problems were. Michelle came armed with some of that at the last GASAC meeting, which I appreciated. And so I would just say the board's contemplating how to move forward with that one too. So I'd say stay tuned to tech plan updates as we consider what we could do with the financial reporting entity. And then the final 2 I'll address, 5th and 6th. One was revenue and expense recognition note disclosures, also on our pre-agenda research right now, kind of a companion project potentially to the RAR project, which doesn't have notes in its scope. So we're researching that. And then gap structure, which is us looking at, does the dual method with OPs and a codification continue to make sense? Would a single method make more sense? In either scenario, are there ways to improve it, et cetera? So I know we're always looking for contributors into that research. Emily's leading that pre-agenda research. So those are the things the GAS Act thinks are our high priority items. Those are the things we want to work on because those are the most, we think, then significant improvements, right? That meet that high bar that I talked about earlier. And so that's how we're addressing them. 4 of them are kind of on our tech plan in some way, shape, or form. The other 2, I would say, stay tuned. We're thinking about how we could approach them and when. Anything else anybody has or any questions about that?
Thank you, Joel, for that update. Just real quick on that. We do poll our group when it comes to these issues and kind of get their feedback on what topics are near and dear to their hearts. And we communicate that through Michelle, obviously. So we appreciate that. Also, just want to give an overall appreciation for the consideration and attention given to our comments when we do submit them. It's one thing to ask for feedback and solicit feedback, which you always do, but then to actually see that feedback go through the process, and you spend a lot of time, and not just our comments, but all the comments that are submitted. So it makes that process for us worthwhile, knowing that we could kind of shift and focus or kind of, what's the word, push the GASB, I don't know, to a certain direction. Advocate's a great word, Mary. Thank you. In certain aspects, even though not all our comments are always implemented, we do appreciate the attention given to them. So thank you for everybody.
Thank you. They are. We consider it all, and they often conflict with other thoughts. So we're that's the job. That's what we get paid to do, right? So but it works best when people provide us with that input. So we know you guys put a lot of thought and have a lot of different perspectives that go into the input you provide. So it's very valued. Thank you for taking the time to do it. I don't have anything else. So thanks for being here. Unless you have anything else, Tony, then.
Nope. I think we're all good, Joel. Thank you.
Excellent. Well, thanks again for everybody for being here. I say this concludes our liaison meeting. Hope everybody has safe travels back and look forward to seeing you next time, but hearing from you probably more in the interim. Anytime you think we can help, we're here. All right. Meeting adjourned. Thanks, everybody.